Financial developments in the last decades proved that all financial market participants everywhere share common problems at a global level, that the hardships are transferable and the risks are similar. Complications arising in the banking system rapidly force investment structures and insurance networks to kneel down. Errors quickly reach from security markets to organizations engaged in money transfers. Seeking a single approach to ensure financial stability is important. The formation, establishment, and development of financial organization in newly independent Republic of Armenia has passed several stages. The first commercial banks emerged in 1991 to 1993. In 1993 to 1995, a two-level banking system, the central bank and commercial banks, was established, where the central bank assumed the function of regulation and supervision of commercial banks as prescribed by the law. And in 1996 to 2002, a number of laws and sub-legislative acts regulating the activities of financial organizations were drafted and enforced, and the phase of cleaning the banking system was implemented. Pocket banks with poor quality assets and a low level of capitalization attempted to expand risky activities with clients' money. Therefore, there occurred a need of prompt interference. The stage of cleaning of the banking system, launched in 1996 to 1997, can be considered the beginning of the formation of the banking supervision system. In accordance with international best practices, as a body specialized in carrying out supervision, the central bank was granted the right to decide independently on insolvency of banks and to discharge functions of immediate salvation of financial condition of problem banks. A drastic move to standards of financial statements was made, and the minimum requirement to statutory capital was increased. Due to those actions, 13 small banks voluntarily bowed out at once, and the remaining ones found new investors. As a result, in 1995 to 1997, the first wave of both merging and consolidation of banks took place, and the second wave started in 2000 to 2002. Already in the next stage of regulation, an objective was set to raise the level of financial intermediation of banks. They served interests of owners more rather than the economy. In this respect, the introduction of corporate governance principles became one of the magic keys. It started to exclude the interference of owners in decision-making by assigning such rights to the professional team of executive managers and reserving the right to decide on strategic decisions to the owners. In general, the corporate governance principles documented fair and clear rules of the game, and the law explicitly defined the frameworks of powers and responsibilities of bank management bodies. In the meantime, for the purposes of making the process of knowing borrowers effective for banks, detecting non-diligent borrowers, and increasing the level of loan repayment, a credit registry was introduced in the country to accumulate, process, and classify complete information about borrowers of the financial field. Since 2006, the Central Bank of Armenia has assumed the regulation and supervision of financial organizations in the economic life of Armenia, thus becoming a mega regulator of the system. Thereafter, any problem occurred in the field, assessment of its impact on other market chains, forecast and prediction of potential complications have become the daily work of the Financial Supervision Department of the Central Bank of Armenia. The law requires that in order to render financial services in the country, an organization must first obtain a license issued by the central bank, and while operating, it must ensure compliance with prudential standards and other limitations defined by the Central Bank of Armenia. The process of operation is subject to supervision, and in the event of violations, penalties shall be applied. The central bank has established regulation standards and rules of business conduct for providers of all types of financial services. In the result of comparing the recorded financial indicators with the defined standards, risks are detected and prompt preventive measures are taken. The rules extend to all financial market participants, commercial banks, credit organizations, insurance companies, pawn shops, securities markets, processing and clearing organizations, and even currency exchange offices. Supervision of financial organizations in Armenia is carried out in two ways: on-site inspections and off-site supervision. At the same time, supervision and regulation are not limited to measures carried out by the central bank. In parallel, they are carried out by owners of organizations, the management, independent auditors, as well as by the public. The above-mentioned measures are strengthened by a number of central bank requirements defined for financial institutions, which are called to ensure transparency of activities of financial institutions. However, it is characteristic that the supervision carried out to ensure compliance with transparency requirements to banks, to prevent risk-bearing activities of banks, and to ensure activities in legislative and regulatory fields is not a guarantee that bank customers are treated honestly and fairly. In this regard, in 2007, the central bank gave a new meaning to the supervision carried out by it, according to which the central bank segregated preventive regulation and supervision from market conduct regulation and oversight. Presently, the divisions are two: a supervision of market conduct, called to ensuring fairness and discipline of the financial institution and client relations, and preventing supervision, called to ensuring uninterrupted activity of a financial institution within the reasonable limits of risk. These two effective regimes supplement each other. On the one hand, the market appears in the center of consumers' attention, records deficiencies detected therein, and on the other hand, supervisors create conditions and control in order to safeguard public money from any dangers. Within the framework of preventive regulation, the so-called rules of the game are defined for financial market participants, various prudential standards and requirements, which, if met, reduce the probability of threats to companies. Emphasizing systemic risk management and prevention, the preventive regulation supervises the financial market at a macro level. The supervision of market conduct is more of a responding nature, as it makes sure that the financial organizations operate fairly, diligently, and transparently in the market, as well as tracks and detects violators of established rules. This is supervision at a micro level, to study the business conduct of any participant of the field. Within the framework of this particular principle, since 2009, the Office of the Financial System Mediator has started its activities in Armenia. The structure is independent. Its primary objective is the protection of rights and interests of individual consumers in the financial area and the prompt, effective, and free of charge review of their claims. The office reviews complaints and claims of customers against banks, credit organizations, and other chains of the system, detects abuses, and sounds notes of warning to supervisors as and when appropriate.